Yo, what's going on, traders? Welcome back to another YouTube video. So today I want to share with you guys why trend lines could be holding you back and the way that you should be using them in 2022 and moving forward. So trend lines used to work really well. However, they don't work as well as they used to. A lot of retail traders see third touch of trend lines and they look to enter positions. However, they get caught up in retail traps. So if you keep entering positions off a third touch of the trend line and getting stopped out, then this video is for you. I want to show you guys why this happens and also teach you guys a much more valuable way how you can actually use third touches of trend lines to understand retail traps, retail stop losses, and how you can start taking advantage of these moves. So let's jump straight on the charts. So the reason for wanting to do this video is we saw a fantastic example of this on the Friday just gone, and I thought, why not break it down and share it with you guys? You can hopefully learn and take value from this video. So here you guys can see we have Euro USD. We've got trend line coming up here that retail traders have drawn from this point here to this point here and extending it out, looking for long opportunities. So as we come down for that 1, 2, third touch of the trend line, what do all retails do at this point? Retail traders go, okay, fantastic. Look, we've got 1, 2, third touch of the trend line. I'm going to go long and I'm going to put my stop loss just below this low, looking for this to have a really nice play up. Now, if we skip into this, what do? We see a nice bounce. We see a nice initial reaction. Retail traders think, okay, great. This is a fantastic position. I'm going to keep holding. And then look what happens. Bam, there you go. Retail traders get stopped out of their position before then. Price moves beautifully as expected in their favor. And you will see this happen 9 times out of 10. Whenever price is coming into a third touch of the trend line, expect some sort of manipulation and expect some sort of stop hunt. Now, one little motto that I always live by when I use trend lines in this way is remembering the break of a trend line doesn't necessarily mean the break of a trend. Okay, a trend line is simply just a visual representation to give you an idea of where price may come down to before pushing up higher. Too many people think trend lines this sort of holy grail thing and it's going to respect it to absolute perfection. Well, unfortunately, that's not the case. And I never use trend lines in this way. I use trend lines in this way to understand what are retails looking at, where are they going to place their stops, and how can I take advantage of that? What is the best way to actually use trend lines? Well, whenever you see it come down for the third touch of a trend line, what you want to do is you want to draw on the previous significant low where retail traders will look to put their stops. So in this example, we've got this third touch here. People go long here. Where are they going to have their stops? They're going to have their stops just below that previous low. So what do we know is going to be sitting below there? Liquidity. So we want to wait for price to grab that liquidity before we look to get involved in the position. And all you have to simply do is wait for that trend line to get broken, grab the liquidity, and look at that reaction. We have that fake out, we have that liquidity grab, we have a strong bullish engulfing counter that actually closes back above the trend line. And then that's where then you want to enter a long position. You put your stop loss just below the liquidity grab, and then you're targeting wherever you were initially targeting. So in this example, came up to a 3.5% and then took out the liquidity and then pushed up even higher for a nice 3-4% move, which is absolutely fantastic. So not only will you be able to take more winning trades off this, but it will also stop you from taking unnecessary losses. So that's just a quick example on Euro USD. And now let me give you guys another example because this happens time and time again. So just from Friday, we have another lovely example here on gold. We got this 1, 2, third touch, and look, what do we start to do? We start to leave a really nice wick. We have that initial reaction where price looks like it's going to support it and price may move up even higher to bring in more liquidity. And then what happens? Retailers probably put their stops somewhere just below these lows. And then what happens? Look at that. Price then breaks lower, stop hunts retail traders out, and then we've had a nice aggressive pushback up. And this could easily just run all the way back up from here. Now that we've grabbed the retail stop hunts, we've grabbed that liquidity, we've had that third touch manipulation, we could easily just push even higher from here. And then again, here, just a quick example on US 100. This works on Forex and indices as well. So here on US 100, we've got this 1, 2, 3, third touch of the trend line. And what do? We have that initial reaction to bring in that liquidity. And where do stops go? Stops go somewhere above here. Maybe they just went a little bit above here as well, but looking for this big play down. Look at that. We have that initial reaction. Retail traders go short there. They think, okay, fantastic. Look at this, really nice reaction. This is ready to absolutely just roll over. And then what happens again? Look, we break above the trend line, completely throwing all retailers off. And maybe they think, okay, cool, look, once we close bullish, I'm just going to cut the position. They cut the position or they get stopped out, and then look what happens. We create that level of resistance. we have that liquidity grab, all of the stops, and then boom, there is the massive knee-jerk reaction once we've grabbed your liquidity. Whenever you see price coming in for that third touch of a trend line, wait. That's all you have to do is wait, and even draw on a risk to reward tool to try and understand what retail is doing. Eventually, you'll get an eye for liquidity where you won't even really need to draw on. You'll just be able to see where there's a lot of liquidity. And it's the exact same with double tops and double bottoms. Understand where retail is going to have their stop loss and how you can use that to your advantage. And then the other thing you want to remember is the break of a trend line doesn't necessarily mean the break of a trend. Okay, so backtest this, study it, and I genuinely believe this will help you out so much more. Not only will you be able to take much more winning trades, also save you a lot of money in the long run by stopping you from taking unnecessary losses. This thing alone massively changed my game. There's so many stuff out there of these retail trading tools that maybe used to work 5-10 years ago, but unfortunately trading stuff like this, third touches of trend lines, double tops, 61.8% fib, these things just do not work anymore because market manipulators know that this is what retail use. This is where retail have their stops. They grab your stop, then we have the real move, and that's why they make bank and you unfortunately don't. But now you're going to. Now you're going to understand these things and you're going to see them a lot more. So rewatch this video, study it, backtest it, and I guarantee you guys will start to spot these things a lot more. Now, I'm going to keep it short and sweet. So I hope you guys enjoyed this video. If you did, please leave a like, subscribe, comment, and I will catch you all in the next one. Peace.